Good evening, everybody. So, as usual, I need good evening. I'm sorry, I'm uh, 5 minutes behind schedule. Uh, Now let's get in. Let's settle it. As usual, I will need two volunteers to indicate their interest in becoming the host for the class. Your job basically is so Clement again. Clement and Clement has indicated interest. So we need one more person to join. So just your work as a co-host is you read the question, right? Just for me to reiterate, you read the question, you participate as if uh, just to make sure that everybody is on the call, right? That's just basically your job, not anything serious. When it's time for Q&A, you also answer the Q&A. You help me read the question. So everybody, you are not permitted to speak. I'm very sorry. I would have loved to allow you speak, but then we will be over 100 on this call. So just indicate, just use your hand. If you are interested in becoming a co-host, just two people. Clement has raised hand, and I need one more person to do that so that we can move on. So gifts, right? So that's fine. So if you're interested, just keep your hand up. Hopefully your hand will not pain you on a lighter note. Yeah, so Clement, yeah. Yeah, so okay. We're a little bit lucky today. We have three people who are showing interest. Just keep your hand up so that will be fine. Okay. All right. Thank you for raising your hand. I appreciate. I believe you are all hosts now, right? So you can just uh show me that by unmuting your mic. So let me check. Right.
Yes, I can.
Okay, makes sense. Your background is noisy. Don't don't keep it up for long. Right. So Clement and Florence, can you please help me? I just want to be sure I'm adding the wrong person.
Yes, I
I'm
can
the
hear
right
you.
person. Okay, makes sense. Makes sense. So is that Clement who spoke?
Yes, sir.
So I need Florence to also speak to show me that she can hear me. Is Florence on this call? Let's make that process very snappy. I'm waiting
It's
for
like you
you.
not unmuted her. She said she can't. She can't
No,
unmute. I think she just wrote she can't.
no. I have, so you are supposed to be able to do that by default if you're a host. Okay, so try it now, Florence.
Yes, I can hear you now. Good evening.
Okay, that makes a lot of sense. Thank you. All right. So let's get into the business, right? So today we are dealing with oil and gas, a very, very interesting topic, right? So far, so good. We've dealt with common income tax, we've dealt with Pioneer, right? So today I'm dealing with oil and gas. Like I said, based on our assumption, or let's say our just our view, we think that your common income tax or Pioneer will be your number one. That's why we've dealt with that. So if you missed that lecture, I will advise you to watch the video. Right. So let's just move straight. So now we are moving on to the Petroleum Industry Act. Any moment from now, you will see my screen. Once it comes up, the host will let me know it has come up. Right. While every other person will assist me to indicate with their emoji. Right. Will indicate with their emoji. So if it's up now, I need you to tell me you can see my screen, things like that. Yeah.
Yes, sir, it's all.
Yes, we can see
Okay.
it.
Makes a lot of sense. Right. So now, if you're on this call and you wrote or you know petroleum profit tax and you wrote petroleum profit tax, please, I will need you to pay attention because you're likely going to stress me in this class, right? You're likely going to stress me. So to avoid that, and your stress is actually a natural stress because you have to unlearn. So your work is a little bit double. You have to unlearn many things, and then other than es- your colleagues will have to learn one thing, but your own work now is to learn to unlearn one before you learn the other. So you may want to pay extra attention if you know petroleum profit tax. It's important for us to note that that petroleum profit tax has been scrapped, and by implication, it's no longer examinable. It has been scrapped since 2022, but I mean, we're in Nigeria, we still have a lot of who will still know petroleum profit tax very well. Uh, It's good that you, unfortunately, you're knowing the wrong thing. So please help me pay attention to details. All right. Pay extra attention if you're in that category of those who know petroleum profit tax very well. Like I said, a good thing you've known, but hold on. Many people on the call already. I don't know why she's saying she cannot join. Please hold on a minute. I just need to address our colleagues on the platform. Please hold on. Hold on. I just want to make sure. And just a thing I've said before, I just want to seek your consent, except there is another thing I may I may extend the class a little bit further. I mean, okay, good. Please, if you are the one I chatted recently, that I sent the code to privately now, Abibat, please give me your emoji that you're on the call right there and you can hear me. Abibat. Abibat, are you here? Okay. Abibat is not here. Oh. Okay, no problem. I believe I've addressed that issue of not able to join, of not being able to join. Right. Florence, you can put down your hand so that you won't be distracted. Right. So let's start. So it was first tested. We'll start from the basis, really. So because we are starting from the basis, we'll start from the year it was first tested so that we can at least have the foundation. But before that, let's do a little bit of background to it. What is PI saying? PI is saying that oil and gas companies, especially those with specific licenses, petrol mining lease and oil prospecting license, they are now expected to pay double tax. So they were expected to pay both hydrocarbon tax and and company income tax. However, the way of arriving at the two taxes are different. So it now begs the question, how are we going to compute each of the tax separately? So one will form the basis for the other tax we are talking about here. So we are starting with November 2022, I believe. Question. Your oil and gas will always be within question 2, 3, 4. I'm very sure of what I'm saying, except if your examiner is a woman, because women are always unique in their ways. It's a very good thing to be unique. If the examiner is not a woman, right, you should always find the oil and gas between 1, 2, 3, and 4. And so for November 2022, you have it question 2. You have it in question 2. All right. So November 2022, question 2. I'll use these questions to illustrate them very well. So, Florence or any other of my co-hosts, you may want to try to please let me read the question.
Okay, sir. Required. As a company assistant tax manager, you have been asked by the tax manager to submit a report to him for review in the next 3 days, as the management committee meeting is slated for next week. The report should specify A, the adjusted profit and accessible profit of the company for the first quarter of 2022 in line with the provision of Petroleum Industry Act 2021. B, comment on the cost price ratio of the company in view of the provision of the sixth schedule to Petroleum Industry Act 2021. Please scroll.
Okay.
Okay. Colamod Petroleum Nigeria Limited is a subsidiary company of a foreign oil and gas company. The company has been involved in petroleum prospecting and exploration upstream for both local and foreign sales for over 10 years. As a report board policy, the management meets and consider the report in respect of its operation on quarterly basis. The result for the first quarter, January to March 2022 of the company, as prepared by the finance controller, reviewed the following: income, we have value of oil sold export, value of oil sold local, value of gas sold, other income, then revenue, then expenses, have production costs, tangible drilling costs for the first appraisal well, intangible drilling cost for the first appraisal well, cost of gas reinjection well, cost of drilling three appraisal well, rent, royalties on export sales, royalties on local sales, sales, salaries and wages, head office shared costs, repairs and maintenance, custom duty on essential depreciation, interest on loan, allowance for doubtful debt, administrative expenses, stamp stamp duties on increase in share capital, bank charges, miscellaneous expenses, income tax provision, tertiary education tax provision, then net profit. The following additional information was provided. The monthly fiscal oil and gas price at each measurement point have been approved on an export parity basis by the Nigeria Upstream Petroleum Regulatory Commission. Head office shared costs include research and development costs, indirect production costs. 3. Repairs and maintenance expenses were made up of repairs of oil pipeline and storage tank, repairs of plants, improvements to the company's building. Please scroll. For allowance for doubtful debt includes specific provision, general provision, bad debt written off. Administrative expenses include natural gas flare fees, transportation, transport costs, cost of obtaining information on existence of oil, expenditure for acquisition of geological information, other allowable expenses. Miscellaneous expenses include tenement levy paid to the local government, contribution to Niger Data Development Fund, contribution to Host Community Development Fund, donation made to widows or and orphans association, then unabsorbed losses brought forward from previous years were 35,000 naira. Thank you.
All right. All right. Thank you. So there are two ways you can always adopt in solving this. It's either use the net profit, add disallowable expenses, less non-taxable income approach, or use the income less allowable expenses approach. But for oil and gas, yeah, I will advise you use the income less allowable expenses approach, and you will realize that is the easiest way to determining this. But for this question, I will adopt the two methods, or let me use the income less allowable expenses approach so that we won't have to waste time and we'll be able to explore more questions. But you realize that that first one, that's the income less allowable expenses, is the best because your income from when computing for the hydrocarbon tax, that's under the hydrocarbon tax, you form the basis for common income tax. So it's pretty much straightforward when you do less allowable expenses. That's one thing. Number two is that there are many expenses, or there are few of expenses that are allowable under company income tax, but are disallowed under hydrocarbon tax. As we solve questions, we will explore many of them. So I want you to be of open mind. There are many expenses that are allowable under company income tax, but are disallowable under hydrocarbon tax. So let's just get this. So we'll be looking at each of the expenses and we'll be looking at whether it is allowable or disallowable. Are you with me?
Yes, sir.
Okay. Colam Road. Is that the name? Yeah, Colam Road Petroleum. I'm just trying to look for the best way I can maximize time and at the same time add value. Because time is of essence now. You know you are at 11th hour. And but if you know your PIA very well and you know your CIT very well, you're already good with not less than 30, 35 marks in your exam. You know those two topics very well. So it's just a function. Please, if they ask you to write your report, make sure you write it and don't waste your time in this exam. You get, if any question is not fetching you much mark, don't make attempt of doing one thing or one thing like that. Another thing is that your hydrocarbon tax is assessed to tax on actual year basis. Your hydrocarbon tax is assessed to tax on actual year basis, while of course your company income tax is on preceding year basis, right? First quarter of 2022 in line with provisions. Yeah, let's just get into it. Do you have anybody who was struggling joining but is now able to join? If you were struggling to join but you've now been able to join, please let me know by raising your hand. Okay. So thank God we now have many people. Was okay. Good. All right. Good. 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 All right. So if you have a question, our usual practice, once it drops on your mind, I understand that we are human. You are likely going to forget your question. Just write it in the chat room or put your hand up. Thank God is here. That is your hand. So just put your hand up like that till the Q&A session. So two things is that you put your questions in the chat room. The host will read your questions immediately, or you put your hand up like that so that we don't have to interrupt. All right. So that's it. So how much is our income? Because we want to use income less allowable expenses, right? Gross revenue. How much is that? We have 1560. My costs are not here again. No. 1560980, Abby.
Yes.
Yes,
Yes.
sir.
All right. So less allowable expenses. Actually, in determining your revenue, yeah, you have your value of oil sold, gas condensate, and all of that. What you expected to pick is the higher of the fiscal value and the actual value. But this time around, I'm not sure you have that here. So that's why I didn't bother explaining it. So in the next, possibly in our next couple of illustrations are going to get that. So your revenue is higher of the fiscal value and the actual price. Right. Let's allowable expenses. So the first one we have the production cost. Production cost is a direct cost and it is allowable under your EIA 210730, right? Then you have your tangible drilling cost, and both of them, tangible and intangible drilling cost, is allowable. Tangible and intangible drilling cost is allowable under PIA. So you may want to note that tangible and intangible drilling cost is allowable under PIA. So we have 18800 and intangible drilling cost. How much is that? 17600.
17600.
Cost of gas reinjection well is allowable under both PIA and CIT, right? So is allowable under PIA and CIT, cost of gas injection well. Cost of drilling well appraisal, it is only the first two well appraisal costs that is allowable. Only the first two well appraisal costs. So in case you have 16, so only the first two is allowed. Cost of drilling appraisal well. So how many appraisal where did they drill? They drilled three,
Three.
right? But you're only allowing two. So you say 2/3 times 24,000. Figure me now, please.
16,000.
So 16. Only the first two well appraisal cost is allowed. Obviously, your rent is allowed. Then your royalties is allowed both on export and local sales. Right. How much is that?
Rent 13,000.
9,800, Abi. Your salaries and wages is allowed. How much is salaries and wages?
170,500.
170,500. What else? Head office shared costs. Head office shared costs, you have to check what is the additional information. Because most admin expenses are not allowed. So you have to be careful here. So we're told that your head office shared cost, are you with me?
Yes.
Your head office shared costs include research and development costs. Your research and development cost is disallowed. Your research and development cost is disallowed, except where the research has to do with geo. So they will tell you geophysical or geochemical, right? But anything geological, geophysical, or geochemical is allowed. But if they just tell you research and development cost is disallowed. So anything not geo and it is research in nature, that's source for information and all of that, is disallowed. If it's provided it's not geo, it is disallowed. And indirect production cost is also disallowed. Indirect production cost is disallowed, right? Then repairs and maintenance, we have to also check what is the content, right? Repairs and maintenance, we have repairs. Are you with me?
Yes.
So your repairs and maintenance,
Okay, sir. Sorry, sir.
yeah. Repairs and maintenance, right? You have your repairs of oil pipeline and storage tanks is allowed. Repairs of plants is allowed. But improvement to building, obviously that's capital in nature. So it is allowed under PI and CIT altogether, right? So in that case, I will say 8930 minus 1430. Figure me now, please. Please help me.
7,500. 7,500.
Eh? 7,500. Abi? What's the
Yes.
next item?
7,500.
All right. Are
Yeah.
you with me?
So the total salaries and wages is allowable.
What do you say?
Yeah. I said total salaries and wages is disallowable under
Yes,
PIC.
salaries and wages is allowed.
It's allowed. Okay.
All right. Repairs and maintenance. My custom duty on essentials. Custom duty on essentials is disallowed. Custom duty is disallowed, but stamp duty is allowed. It's allowed, but stamp duty is allowed. Right. Stamp duty is allowed. Depreciation is disallowed. Depreciation is disallowed. Interest on loan is disallowed under PIA. Interest on loan is disallowed under PIA. Interest on loan is disallowed under PIA. Allowance for doubtful debt is disallowed under PIA. Allowance for doubtful debt is disallowed under PIA. Your admin expenses essentially should be disallowed, but then you have to check, do you have additional information? Right. So obviously we have additional information here. So let me check admin expenses. So you want to check what is the admin expenses. You have, are you with me?
Yes, yes. The natural gas flare is
So natural gas flare fee is disallowed. Your natural gas flare fee is disallowed. Your transport cost is allowed. Your transport cost is allowed. Cost of obtaining information on existence of oil is like your research cost, so it's disallowed. But expenses, expenditure for acquisition of geological information, I told you anything geo is allowed, right? Anything geo is allowed. Then obviously other allowable expenses also allowed. So you have 13,200 plus 14,900 plus 33,800. What do you have, please? Please help me.
61,900. 61,900.
Okay,
yes.
61,900. Then we said stamp duty is allowed, right? Don't forget stamp duty is allowed, but custom and excise duty is disallowed. That's under, is allowed under PIA, but disallowed under CIT. 1,000. Bank charges is disallowed. Bank charges is disallowed. Any form of bank charges at all is disallowed. Your miscellaneous expenses, let's check what is the content to know whether it is allowed or disallowed, right? So we believe we should have miscellaneous expenses. So we have tenement levy is allowed. Are you with me? Tenement
Yeah.
levy is allowed. Contribution to Nigeria Data Development Fund is allowed. Contribution to Host Community Development Fund is also allowed. But donations made to widows, right, is disallowed. Donations made to widows is disallowed. So we have 22,500 minus 3,000, I believe. So what do you have there?
19.5.
Right. Then income tax provision is disallowed. Any provision whatsoever is disallowed. Any provision whatsoever is disallowed. So I believe we are done with the allowable and disallowable expenses. So help me figure. Please help me. Oh. Please help me. Am I alone?
No.
Okay. Okay. Figure, please. There.
619, 630.
619.
630.
Okay. So let's. Sorry. So you have your adjusted profit. How much is adjusted profit?
941,350. 941,350.
941,350. Right. Profit. How much do you have? 941. 315. I believe that.
941,315. Yes,
That's all.
315.
315.
So that's all about that question. All right. 80 marks. I will introduce you to cost price ratio, but at least we have to learn how to work first before we start running. Right. So I will introduce you to cost price ratio next couple of minutes, and that's what the man is saying here. What cost price ratio is saying is that these your liable expenses, this 619, should be restricted to the higher of 65% of revenue, and your eligible expenses less some specified costs, right? And specified costs include your rent, your contribution to host community development fund, contribution to NDDC, your royalty, then your tenement levy. So that's what the law is saying basically. But when we get to that side, we'll cross it, and that's the B part. We'll cross that part. But for now, let's just assume that this is what we want to do. Right. So let me entertain your first type of questions here. So I'm going to check the chat room. Right. So under CIT, for Miriam, under CIT, yes, you are correct, is allowed. But under PIA, all forms of provisions are disallowed, both specific and general. So yeah, why is stamp duty allowed? Your stamp duty is allowed. That's just the provision of the law. That's just the provision of the law under PIA. Adebayo, I don't. I mean, can you see my screen now? Okay. So the law says your first two well appraisal costs should be allowed. So your report, I said in my first class that your report basically is going to feed from your computation, right? So if you're writing internal, you write a memo. If you're writing external, you write on a letterhead. That's just basically it. I believe all of us know how to write correspondence. So I said like carbon tax on actual year basis, your CIT on PYB. Yeah, oil and gas is a general term. So under oil and gas, companies are now eligible to pay both hydrocarbon tax and company income tax. Both hydrocarbon tax and company income tax. So salaries and wages is allowed. Is allowed. Salaries and wages is allowed. So Leonard, all custom is disallowed. All custom is disallowed. All custom and excise duty is disallowed. So that's the law. Bank charges, interest on loan, things of that nature is disallowed under PIE, but allowed under CIT. Right. So base period for hydrocarbon tax is January to December. Basis period is January to December. Don't worry, I will teach you in the next couple of minutes how we are expected to do that, Latifa. But though I mentioned that is the higher of your fiscal value of voices and actual price. But don't worry, we'll put that in practice. Any research cost is just the provision of the law. It's your senators that said it, not because of the nature of the business. And that's to do with procuring information, provided it's not geological, geophysical, and geochemical, is disallowed. All right. So Leonard, Omobukola, Omobukola. Okay. Emmanuel. Okay. Sorry. So it's only the three people I will entertain. Oh, so I have noted them already. only Leonard, uh, Omobukola and Emmanuel. Yeah, only Leonard, Omobukola, Emmanuel. Yeah.
So I'm here
So
too.
Leonard now.
Okay, I'm here
Yes,
too.
I'm here. Thank you very much. In your last class, you said that salaries were not allowed for as a deductible allowance. I mean, allowables. But here you're saying salaries and wages is allowed.
So that
Now, what I'm saying
it will.
is it that salaries and wages is allowed, but salaries and maybe other staff emoluments are not allowed?
So maybe I don't know. I said it, but in case I said it, I'm just debunking what I said. The salaries and wages is allowed, right? But depending on how they coin it again. So if it is now indirect staff salary, basically, then you may disallow it. But we want to assume that this salaries is basically direct for those guys who work on the field.
Okay, does that is that different from salary and staff emoluments?
Yes, that's different. So the what guides us basically is the idea here of wages. So wages is directly related to those on the field. So that a little bit modifies the whole thing because we're looking at it as per direct cost.
Okay, so is
Do you get?
salary and staff emolument are allowed or not allowed?
So again, it depends on if they are. The thing is, I don't want to put myself in a box, which you want me to do, right? So depending on if it is directly attributable to what we have here. So if it is a shared service cost, for instance, if your salaries and wages
Okay.
under shared service cost, it will be disallowed. So again, it depends on if it is directly attributable to what we are talking about here. But when you hear wages, really, it will actually tell us that it is allowed. That's just the basic thing there. Yeah,
All right,
Bukola,
thank you very much.
you're welcome. Bukola, okay.
Oh,
Emmanuel,
yeah. Can you hear me?
okay, I can hear you.
All right, thank you. Well, my whole question also boils down to salaries and wages, because you've given an explanation which I understand better now. Because what me I used to think is all expenses that is relating to what's it called,
Admin.
petroleum operations, that all those
Okay.
ones should be allowable. But now since you
Mm.
said salaries that people on field, we shall put it there. Then one of these costs, there's one that transport costs, because there was one of these book that I was reading that says anything power cost, transport cost, they should be allowable under CIT for hydrocarbon. Because
Allow you under CIT.
for hydrocarbon,
No, that's I mean that statement sounds a little bit confusing
you know,
because there are two different tax regimes,
yeah,
right?
you know,
So that
okay.
statement sounds a little bit confusing, but let me allow you to go ahead.
Let me make it clearer. For
Okay.
hydrocarbon, they can give us all these petroleum company and tell us to compute HCT and CIT for it.
Yes.
So yeah, like that's the CIT of what I'm saying is of the allowable expenses is what I'm saying. That if they give us a petroleum company and they ask us to compute CIT for it, so all these power costs, transport costs, they will be allowable for CIT for hydrocarbon.
That's correct. They allow you under CIT. Obviously, if you pick any random to guide you for that, your CIT, your typical provision for CIT is not too different from your normal CIT rule.
Yeah.
Anything that will be typically admitted under CIT will still be admitted.
Yes.
Is that what you're asking?
Yeah, but then like transport, is it relating to a petroleum operation, like the drilling, the mining, everything?
The
We have to allow it. I don't know.
So in that case, if you don't have additional information, I will advise you to allow transport and traveling, basically, because you never can tell. We still have some guys in the midstream. right? But
Mm-hmm.
midstream has to do with, are you with me?
Yeah, I'm with you. I'm with you.
So you could still have a lot of transition from the upstream to the midstream, or from the upstream down to, yeah, from the upstream down to the midstream. So at that point, you still have to transport, really. So in that case, where the examiner is silent, I would advise you to allow that expenses.
Okay, coming to the word transport. They said for David, like of all these oil prospecting, oil mining, they gave it a definition that it has to do with drilling and blah blah blah. Then that one
Yeah, they are
it is
basically
taxable for hydrocarbon. Then
yes,
for the other one that has to do with transporting of to market and to sales, it
that's
is
under CIT.
taxable. Yes.
Yeah.
So then even coming from the definition of it, I don't know, it's confusing because the definition saying this one is for CIT, that transport to sales and all of this is from CIT. And now that we have to allow it. I don't know.
Yeah, I'm not getting where's the confusion coming from.
It's coming from what the transport. Quite all
Okay,
right.
so now from the point of exploration of crude,
Yeah.
from the point of exploration of crude will not turn itself to oil products immediately.
Yeah, sure.
Yeah, so you still have to move it at that point, and I believe that it should be allowed for for those guys that did the oil mining and prospecting. Do you understand?
Okay.
If they're the one that incur the costs, it should be allowed for them.
Mm.
Yeah.
Hmm. Okay. No problem.
All right.
It's fine.
Manuel.
Hello, good evening.
Yeah, good
Can
evening,
can
Chief.
you hear?
I can hear you.
All right. So my question is on you said allowable expenses for there is both tangible and intangible drilling costs out. Can you hear me?
Yes, I can hear you.
All right. So but in this question it was tangible drilling costs for first appraisal well. Situation where they have tangible drilling costs for more than one appraisal well, like I can see first appraisal well, second appraisal well. Does it really mean
Only the,
because you know
only the first two well appraisal cost is allowed.
whether tangible or intangible?
Yes, only the first two well appraisal cost is allowed.
Okay.
So anything you are doing, bear it in mind that is the first two well appraisal cost that is allowed.
Then the issue on salary and wages, I think is it that we need to study the question well before we start solving
Yes.
because
So
for
you have to
example,
check if it is okay. Go ahead.
this current question we are doing is not specified if we have to separate the upstream from the downstream. In the question when it where we have it joined together, I think that's where it now starts assuming that transport should be for CIT and then transport should be for PIA. For example, this kind of question we are solving currently that is just PIA alone. So we can assume that transport is allowable for PIA since we were not told to separate like CIT. I don't know if you understand what I'm saying.
I'm not sure I got you.
Okay, so what I'm saying is, from your explanation, you said the way they set questions now from 2022 is we separate hydrocarbon from CIT. Now, in
Yeah.
this particular question, we're not told to separate. That means we will not compute CIT. It's just
Yeah, it's just
hydrocarbon.
the yes. We are not even
So in
computing hydrocarbon because the man really asks you to do adjusted profit.
okay. All right. So in a situation where we have a question having the two, so we can assume that transport is allowable under CIT, not this
No, it
not
is that what I'm saying is it should be allowed under PIA, except where is now admin in nature, where you have a basis
okay.
to say that it is admin in nature. That's where you will disallow it.
So basically any transport that is not downstream is not allowed under hydrocarbon.
I didn't get that.
So basically any transport, for example, this transport, if it is upstream, it is not allowed for this type of computation.
I'm not sure. Can anybody hear him?
Hello?
Yes, so can you hear me?
Yes, I can hear him very well.
You can hear him very well, Abi.
Yes,
Yes, I
sir.
think his
Eh,
concern is also one of my own concerns as well. But I think you've also explained that any cost that is admin in nature, whether salaries or wage, whether salaries, transport costs, as long as it falls under admin, it will be disallowed under PIA, right?
Hello, can you hear me?
Yes, you can hear
Yes,
you
sir.
now. You went offline a bit.
So I was saying that if you have a justifiable reason to classify it under admin, then you can disallow it if there's justifiable reason. Do you understand? But then when you hear wages, your mind should go to direct cost immediately, because wages has to, you can attribute wages to the field guys, right? When you hear transport and traveling, I'm saying that except where you have a justifiable reason to classify it as admin expenses, you can as well just allow it. Do you understand? Because even you will notice that even the admin, what they classified as admin expenses, we had to go and check inside and then be sure that they were really admin. Do you understand? Does it make sense to you?
Yes, yes, yes.
Yes,
All right.
very well.
Okay. Thank you.
Thank you very
So
much.
you're welcome. So if I've not addressed your question at this time, please put up your hand. Unfortunately, I will not be addressing you now. I will have to address you in my next round of question. Right. Just put up your hand. Oh, I'm sure your hand will not pain you. Just put it up like that so that you can meet up with the next round. I just have to move on so that we can be able to attempt as many questions as possible. And as well, you can actually use the chat room. And I will still not admin, I will not I mean, how do I put it now? I will not attend to chat room until the next round of question too. So that we were able to move fast and good. So let's do, I think what we solved before is November 2022 question 2. So let me do May 2023 question. You always find it between question 2 and 3, 4. So let's look for where it is. Always find it question 2, 3, 4, Abi. Everything's up now. Okay. So I have it as question 4 here. I have a question for you. I have an assignment. Unfortunately, I don't have the solution. It's the most recent CITN past question. You may want to do it for your, it's good for your health, really. So I will send it to you immediately after the class for you to examine. I don't have the solution, but if anybody send it to me, we can look at it together, and then possibly that will form that will. But I just need somebody to engage me to be able to provide a suggested solution to that thing. Right. So if you're able to attempt it, fine. Otherwise, it's also fine. So computation. So Florence, you want to read, Abby?
May 2023,
3.
question 4.
Yeah. Hold on a minute.
Okay. All right.
4. So you can read now.
All right. Thank you. Jaga Petroleum Limited was granted an oil mining lease (OML) in January 2001
I said you should
for
start from
exploration.
requirements. That's why I didn't scroll up.
Oh, sorry. Okay, required compute for the relevant assessment year. The company's A. Hydrocarbon tax liability. D. Company's income tax liability.
All right. Go ahead.
Okay. Jaga Petroleum Limited was granted an oil mining lease 2 ml in January 2001 for exploration of oil and gas in onshore and shallow water operations for 20 years and a further renewal of 20 years if applicable is made. If application is made. At the expiration of the initial license in December 31st, 2020, the company decided not to apply for extension of its current license under the Petroleum Profit Tax regime and opted for automatic conversion on January 1st, 2021 to the petroleum mining lease, to the petroleum mining lease as enshrined in the Petroleum Industry Act 2021. The following details were extracted from the financial statements of the company for the year ended December 31st, 2021. Revenue category, we have type, quantity, actual and fiscal prices. Crude oil sold, Bonny Light, 7.5, that's quantity
All
barrel,
figures
actual
assumed
price.
correct. Expenses.
Huh?
I said all figures assumed correct.
Okay. Expenses or expenditures, items, that's royalty incurred and paid for, 118,900. Production cost, 112,660.
All figures
Concession
assumed
rental,
correct.
correct, all right. The following additional information was also made available. First two appraisals were costs consisted of 60% tangible costs and 40% intangible costs. Two, expenditure for the purchase of information on the existence of petroleum deposits included. All figures assumed correct. Miscellaneous expenses, then agri capital allowances for the year was 4.5 million. Production allowances after commencement of the acts. Onshore operation, all figures assumed correct. Then 8, assume that 440 is equivalent to US $1 and tax liability payable will be in local currency naira. Yes, sir.
All right. Thank you. That your assumption. May it happen to Nigeria. Oh. Your assumption is now a prayer point.
Amen.
You
Thank you,
see
sir.
the assume it's not you that is you that assume, not me. Oh. But this assumption is a prayer point. Anyway, it was reality then, just barely 3 years ago. Come on. Okay, so let's start. The first thing is we have to determine our revenue. Don't forget we said that your revenue is the higher of your fiscal price and the actual price. The fiscal price and the actual price. That's what forms your revenue, right? So you will say the crude oil sale. Are you with me? So I have my Bonnie light. So how much is that? Which one is higher? Is it the fiscal price or the actual price? The fiscal price is higher, okay? So you see 77 times. How many millions did they sell? 7.5. Please confirm that you can still hear me.
Yes, sir, we can hear you. Yes,
7.5 then multiplied by the exchange rate. So how much is the exchange rate? 440. Right. So let's go straight to the next one while you solve. So we have for Cardos medium. Focados medium. So this case, your 70 is higher, multiplied by 5.2 million barrels, multiplied by the exchange rate. Then you have condensate. Abi?
Yes.
Then you have ABC condensate. How much is that? You have 55 is higher,
5
multiplied by 4, multiplied by 440. Then you have your gas liquid.
is higher.
And that's XYZ liquid. That's 50 is higher, multiplied by 3.8, multiplied by
254 100.
next one.
one
I trust
sixty
you.
160 160.
Next one.
96,800.
9.
96,800.
Next one.
83
600.
600.
3, 600. So what's the total here?
594,650.
594.
650.
Okay, so we say, are you with me?
Yes.
So gross revenue. Five. All figures should be million. Let me just change this to million. Five nine four 660. Balancing charge. If you have balancing charge in the question, you input it there, right?
Then
But
we
I'm not
add it.
sure. Yeah, you had it. I'm sure everybody in this class know what balancing charge is. Yeah, it's the excess of the carrying the sales proceeds over the taxable value of the asset. So you typically have that when an asset is disposed. Total gross revenue, right? 594,660 less allowable expenses. So the allowable expenses is the next thing we want to check for. So royalties is I live in Nigeria, so I have to keep asking that you can hear me.
Yes.
So concession rentals 25 200 Abi.
Yes, sir.
What else? Repairs. Repairs is one delicate place that they can dump anything there. So you don't want to trust them with everything they have. put here and check the additional information and be sure that everything you're allowing is truly allowable. So do you have any breakdown?
Alright, yes, no.
No, okay. So you pick everything. 680. Then you have fixed exploration well cost.
2777.
How much is that?
2777.
Hmm?
But we have additional information.
What do you say about it?
First two appraisal well costs consisted of
No,
60%
no, we've not
tangible cost.
gotten there. Oh. It's first exploration well cost. We've not got it. We've not got it to the well appraisal cost.
Okay, first exploration well cost. Okay,
Yeah,
2770.
yeah, 2772. Right. Next thing is
Net of
repairs of.
production improvement.
So
Okay.
it's also allowed, provided we don't have any basis or any additional information to show if there's any improvement cost there. Right, 50. Cost of gas reinjection well. How much is that?
1 to 50.
At least I'm sure if there's nothing, you know Geo now, Abi.
Yeah.
Custom duties is disallowed. Right? Custom duties is disallowed. First two well appraisal costs, both tangible and intangible is allowed. Right? So assuming we were told that uh it is 16, would have taken the first two.
Okay.
So only the first two is allowed, both tangible and intangible.
Intangible.
Right, just well appraisal cost. Are you me?
Yes, yes.
The commissioning and abandonment is allowed. How much is that? 1.5.
Okay, one
So
five
depreciation is allowed. Environmental remediation fund is allowed.
1,500.
1,800. Abi.
Yes.
State ground rent is allowed.
22
How much do you have there?
2000.
Finance
Governmental
cost, irrespective of the nature, is disallowed under PIA. Anything finance cost is disallowed under PIA. Is it clear?
rent.
Host community
Okay.
cost. 1.4. Miscellaneous expenses. We have to check, it's another dump site. They drop a lot of things, right? So you want to be sure that what is there is actually. Are you with me?
Yes. We have gas flare fee under miscellaneous expenses. Donations to orphanage homes, terminally cost, stamp duty, signature bonus paid for deposition, petroleum deposits. So, allow. It's a lot of it. Yes. Yes, it's not. Yes, I'm not because that's not it. Stamp duty, is it allowed or disallowed? Hello?
It's allowed.
Okay, okay. But it's like the lecturer is not there.
Sorry, can you hear me?
Yes,
Please, what was last thing you heard me say? I
Mr.
hope I've not
Lennon.
done anything reasonably.
Yeah, we are on Mr. Lennon, sir.
Okay.
On
Sorry
Mr.
for
Lennon's
that network
section.
failure. Sorry about that. So 169 plus 18, what do you have? Do you know I selected the 169 and 18?
Oh,
Did
no,
you hear
no,
the
we don't.
explanation that is only this? Okay. So I
No.
was saying that only from the breakdown you have here, your gas flare fee is like a penalty, really. So it's disallowed. Your donations is disallowed under CIT. Terminaling is allowed. Stamp duty is allowed. But signature bonus is disallowed. Signature bonus is allowed. Right. So let's go. Figure me now.
Alright.
187.
187. All right. Are we done? Admin expenses. So want to check. Does the admin expenses has breakdown? Hmm?
No,
So if it doesn't have breakdown,
no.
it's disallowed, right? If it doesn't have breakdown, it's disallowed, basically. So what's the
It's
total?
allowed.
Yeah. That's why I didn't want to put myself in the box. All right. Total
274,539. 274,539.
274539. You know, I was explaining something around cost price ratio,
Yes.
right? So this is where we want to now apply the cost price ratio. What the cost price ratio is specifically preaching, right? The sermon that guy is preaching, the essence of his own sermon is that he's saying that we know that the oil and gas space is they incur so much cost. So let's try to reduce the cost that is eligible for CIM, for PIA, for hydro, that is eligible to be allowed, right? So eligible cost now is are you with me? Is the lower of 65% of gross revenue and the eligible costs, right? So let's just, so that it will make more sense to you, cost price ratio. So now we have our gross revenue. Right. So how much is our gross revenue?
59 594
594
660.
660. So let's just say you restricted to 65%. You can also, yeah. So what's the 65% of 594,660?
386,529. 386,529.
Yeah.
Please help me.
386,529.
386,529. So what the law is saying is that come what may happen, right? The eligible expenses, the total expenses must not exceed this 389,529, right? This is your first leg of the competition. So your second leg is now allowable expenses. So what's your allowable expenses?
274,539.
So 274,539, right? Now, these 274,539 now have specifically exempted costs, right? It has some specifically exempted costs. So I'm going to say less exempted items. So you have your royalties. Royalties is an exempted item, right? So how much is royalty?
This is the
900.
reality of and picture.
Eh?
This is the reality.
Yes, royalties incurred and paid
Paid
for.
and paid for.
118,900.
118,900.
900, Abi. So your rent.
Yeah.
So in this case, you have your concession renters. It's also included in the exempted items. How much is that?
25,200.
Then if you have any NDDC charge, it also qualifies, right? Do you have any NDDC charge?
Yes.
So how much is
That's
it?
200.
Then host
200.
community development fund is also part of the cost. Do you have anything like that in the question?
Yes. Yeah.
How much is that?
1129. 1129.
There's
Host com
1,400.
No, host
1,400.
community is 1,400.
1,400.
14. Okay,
All
14.
right.
Sorry.
So, yeah. Do you have any donation to any other fund? Yeah, environmental remediation fund. So how much is that?
1,800.
18.
1,800. So I nearly forget this now. These allowable expenses, you add your capital allowance to it. Add capital allowances. So how much is your capital allowance here? Do you have any capital allowance? 4,500, Abi. So what's the total? The total allowable expenses.
Okay.
Please help me.
79039.
279039.
Yes.
So let me add all the exempted items together. What do you have?
147,500.
147. So deduct that from 274 to net eligible expenses. Deduct it. What do you have?
131,539.
539. Have it together. So now, don't forget we said the lower of the two. So which one is lower now? Is it the net eligible expenses or the maximum allowable? That's the restricted
Let
figure. So is the net eligible expenses you will now pick here. So net eligible expenses. You pick 131,539.
131,539.
131,539. So that becomes your new expenses that will be deducted from your revenue. Right. So 131,539. So in that case, are you with me?
Yes.
Yes.
So in that case, what becomes your adjusted profit?
463,121.
463,121. Right. So do you have any loss relief? Do you have any loss relief? Any loss relief? Not that I can see, but in case you can see anyone, please point it to me. So you have your accessible profit. Can you hear me?
Yes, we
Yes.
can hear you. There's no loss relief.
63121 less capital allowance. How much is the capital allowance?
4545.
Can you hear me?
Yes.
Yes.
Please, how much is the difference?
458621.
Kumar. I'm familiar with. Hello, can you hear me?
Yes.
Uh, okay. It's better now. Hello, can you hear me?
Yes, you went
Yes,
off for a
please.
while. You just came back now.
Oh, no problem, no problem. Honestly, I anticipate all these and before we start today. Honestly, everything you are saying, I'm not surprised really. If I would have been surprised if you all understand everything at once because it's not the conventional CIT. So I can understand if you have questions. Right. So let me deduct it, please. What do you have?
One
Four
five
five
eight
eight
six
six
two
two one.
one.
458 621. So less production allowance. Do you have anything like that? Yeah, do you have production allowance? Yeah. Can you hear me?
Yes.
Yeah. So production allowance is 19 Abi. So then
Four
what do you
five 456 721.
that's a chargeable profit, Abi.
Yeah.
456721. All right. So now what you would do in the exam is typically just check, yeah. For this guy, what is the nature of the license he has? He has oil mining lease, right? So you go to the last page of a question paper. The tax rate is ranges between 15 and 30%, but you don't have to worry yourself about what is what, right? So hydrocarbon tax, you have petroleum mining lease is 30%, right? So you will say hydrocarbon tax at 30%. So what is that?
137016.3. Point
137016.3.
three.
All right. So that's about that. So let's quickly work on your CIT, computation of company income tax for now preceding year basis. Right. Now preceding year basis. So you say for 2022 year of assessment. Right. Are you with me?
Yes.
So you say gross revenue. How much is the gross revenue? Please, can you
Five
hear me?
nine four six sixty. Yes. 594660.
How much is the gross revenue?
594660.
594660, Abi.
Yes.
That less allowable expenses, right? So you say allowable expenses under PIA. How much is that? What was total allowable expenses under PIA? We have 274,539, Abi.
Yes.
Then we have other allowable expenses. Those are expenses that we excluded for PIA but are liable under CIT. Other allowable expenses. So for instance, let's check again. finance cost, right? Your finance cost is allowed under PIE, but is allowable under CIT. So how much is the finance cost? 25, right?
Yes, 25.
Are we together?
Yes, sir.
Are we together?
Yes, sir.
Then under one, we disallow. Which other expenses did we disallow that should be allowable under PIE? Admin costs. How much is the admin cost? 1980. We are looking at other expenses. That's what we are looking for. Please, if you notice anyone, please let me know. We have donations to It's 132. So I think that's all. Have we exhausted everything? Please help me. Oh.
Two 2137. Special duties allowable.
Hello?
Hello.
Can you move on?
Yes.
Okay, so what's the total?
Yes, I
Total
suppose you were
allowance?
saying custom duties is it's allowable. So I should draw your attention to it.
No, custom duties is around that CIT. Custom duties is disallowed under CIT.
Okay, so the total is 2137.
213.
Okay, no. I forgot to add the first one. That's 276676.
6.
76.
All right. So you have accessible profit. How much is it?
317984.
317984, right?
Yes.
Yeah, less loss relief. You have any loss relief?
No.
No.
No, right. So you still have 317984, right? Nine eight four. Then you have less capital allowances. How much is the capital allowance?
45.
5.
45.
Total profit, Abby. How much is total profit?
313,484.
Like this, Abby.
Yes.
So CIT at 30%. Earlier,
94045.2. Point two. 0.2.
yeah, TAT at 2.5%, Abby.
Yes.
Of accessible profit. What do you have?
794.60.
Hmm?
That's okay. Yes. 7949.60.
0.62, you said?
Yes.
All right. So your tax liability on that, your CIT. Help me.
Give it total tax payable.
101,994.82.
994.
Eh?
101.
Mm-hmm.
994.80.
994.82.
60.
So is the first one 60 or 60? All right.
It says to
Okay. So it's rate. All right. All right. All right. So let me start addressing your questions. Right. I hope it's fine. No. So let me first check the hand. So now I have 9 people who have raised hand. Right. So I have Adenike Basira Ipoju. Yeah, good. Only the first 9 people. Wait. About me, I don't know what you mean by finished. I don't know what you mean by finished. Actually, the way you wrote that finished, it sounds very, very funny. No, it's not double counting. No, it's not double counting. So the cost price is different thing entirely. That's Basira. The cost price issue is just like trying to ensure that you don't exceed this threshold. So it's not double counting at all. It's just for us to determine the threshold. Okay, they said the TET figure is wrong. It should be 60. Okay, should be 60. Then 8 will be the answer here. All right, thank you. So minimum tax has been charged from time immemorial, right? But if you are saying that when you adopt the one line method, so for 2020, they adopted 2020 and 2021, they adopted 0.25%. Yeah. Then 2022 upward, it has been 0.5%. Yeah, you don't restrict capital allowance. I mean, for this guy now, if you check, you realize that the capital allowance is 4,500. 4,500 is less than 2% of the total profit. So it does not necessary to show that working at all. Custom duty is disallowable under CIT because what you are importing is capital intensive, and if you go back to your year 16, all costs incurred to bring the asset to its intended use. So that's the reason. So custom duty is essentially on capital assets, that capital items purchased or imported, basically. That's why it's like that. What about 85 for others? I didn't get 85 for others. All right, can we get an explanation? So upstream has to do with things upstream, yeah, has to do with anything that has to do with mining, extraction, exploration of crude oil. Downstream has to do with activities that has to do with will be assessed to tax under double tax regime, basically the hydrocarbon and the CIT. All right. So let's start with the first 9 people. So Adenike, Adenike, okay, I have not submitted.
Okay,
So
thank you.
yeah,
Can you hear me? I'm still under the wages and salary. I think that any company that operates under marginal field and prospective lances is allowed. Salary and wages is allowed. I may be wrong because I want you to give me the reason why they have to allow it under prospective license and marginal field company. Why salary and wages under mining list is not allowed. Can you
okay,
hear me?
but I can hear you. I'm just trying to. The thing is that what I know, to the best of what I know for now, right? I can know any other thing another time, but at least for now, what I know is that if you have any reasonable basis to classify it as admin expenses is disallowed, if you have any reasonable basis, which will always be in the case for prospecting license, that right. So maybe that's why it is
I
allowed.
can't hear
But what
you.
I
I
know
can't hear
basically is
you.
that if
Your
it is
network went off. It's breaking. I can't hear you.
hello, can you all hear me?
I can hear
Yes.
now.
Hello, can you hear me now?
I can
Yes,
hear
sir.
you now, but it's breaking.
We can't hear you.
Hello, please.
It's breaking.
Hello, can you hear me?
Yes, we can
Yes.
hear you now.
Sorry. I just have to keep switching between network. Can you hear me?
Yes.
Yes, I can hear you.
Yes.
Okay, good. So where are we? Where are
We
we?
are
Where are we?
still
I was
under
asking.
salary and wages. Why is salary
So
and
I was.
wages allowed
So I
under
said
prospective
basically.
marginal complaint? Why is disallowed under mining list? Because I've checked questions and I see that mining under mining list is not allowed.
The simple answer is this: is that if you can trace it, what I know, to be honest, I've not even gone detailed to check in for whether it is what right. Yeah, I will send you I will send you note for PIA. But
Okay.
unfortunately, what I did for PIA, I'm answering Latifa. I will come back to Adenike. So what I did was to merge PPT with PIA. But please, any information on that note you see that has anything that has to do with PPT, I beg you, ignore it. Please ignore it. Hope that is noted for everybody. So back to you.
Okay.
My
Come
point
again,
is,
sir. Come again, sir. Sorry.
I will send you notes that I compiled for what's the name, for oil and gas. But in that note, you have your PPT there. So anywhere you see PPT, just jump and pass. Do you get? And move to the next information that is there. What's reading this PIA? Do you get? So just read up the PIA part of the note. I think that is going to be good. And I would want to expect that. Yeah, I will send you the solution. I will send you the solution. I would expect that you also read up this part, anything we've done today, although I'm still going to solve, I think I should solve one more question to solidify the understanding. But I want you to read and I'll give an assignment. I want you to do it before our next class. My next contact period with you should be on Thursday, I believe. But I'll have to confirm from the timetable. My next contact period with you should be on Thursday, 8 p.m. All right. So let's come back. So Adenike, back to your question. So if it is directly relating to people, guys on the field, where you can trace, so that works for expecting and marginal, because they're the one that do with exploration basically. So you can actually trace that to their fee. You can actually trace that to production, maybe. But what I know is the rule of thumb for this case is that at the end of the day, if you can classify it as admin expenses, you disallow it because admin expenses is disallowed under IPIA. But if you can directly trace it to production or extraction of crude, then you classify it under allowable expenses. I hope that clarifies.
But in most questions, you will only see salary and wages, and there is no additional information on that. So how can
So if
somebody
to be safe there, if you see salaries and wages, just allow it.
allow
Yes, allow it.
for all complaints, either
Yes, that's
mining
what I'm
or
saying.
extracting of-
Just allow it. Just allow it.
But I will still plead that maybe you should help us to research more on this area. So further, you said that
Yes,
if
I
you
will
miss any
check and get back
of
to
the
you in this case.
disallowable, I too I will also research on it. If you miss any disallowable or any allowable expenses,
No, it's
automatically
affecting a lot of
CCTV
things.
is done.
It's affecting a lot of things, right? I
Okay.
understand. So I will
So
get
that
back
is
to you on
why I
that.
concentrate on that. Please help us
Yeah.
to get research on it. Thank you.
Yes, I will do that. I will do that. Thank you. Yeah, Florence, your hand is up.
Yes. Please, my question is on this The first question we treated, the allowance for
Mm-hmm.
doubtful debt included. I thought that we disallowed everything, specific provision, general provision, and bad debt written off.
Everything.
Everything.
Yes,
Okay.
everything. Anything allowance disallow it under under PIA, will allow under CIT.
But
Allow
under
for
CIT is
disallow
only
under
specific
hydrocarbon.
that is
Mm-hmm. Your head is there.
only specific.
Yes.
All right, thank you. Thank you, sir.
Yeah. You're
Then,
welcome.
then this other
Okay,
one,
me.
all
Okay.
the
Okay. Go
one
ahead.
we, all right, sir. All the one we added together under the cost price ratio. That is to say, we did not leave anything, not left anything untouched.
On the
Because all the
cost,
one that
I didn't
was
get you.
allowable on the cost price ratio, CPR or CPR. Hello, sir.
Yeah. I please go
Hello?
ahead. I didn't get that.
Okay, okay,
Yes, I'm
okay,
with you.
sir.
Please
I
go ahead.
said, oh, okay. The first one, the hydrocarbon tax liability, all the one we disallowed, all the
Mm-hmm.
disallowed expenses. When we got to cost price ratio, we allowed everything.
So technically, it's not that we allowed.
Okay,
Technically, that's it's not what we're trying to do at that point,
all right.
right? Is that we're trying to kind of do it. How do I put it? We're trying to bring everything into a restriction, basically. Does it make sense? So what we're trying to do at that point is not the function of whether it is allowed or disallowable. There are some list of expenses in
All
the
right.
act. There are some list of expenses in
Okay.
the act that the act specifically says that you should deduct them from their allowable expenses. So it's not like a function of, I don't know how to put it, but we call them exempted items. So
Exempted
in
items.
technically, it's not that we are disallowing it again. What we're trying to do is we are trying to reduce the total expenses, because the tax
Okay.
authority is trying to do is just to increase the tax. And you know, the higher the profit, the
Okay.
higher the tax. So in a bid to increase the tax, we are trying to say, okay, if your expenses is 100 million, for instance, let's try to reduce 100 million. So there are some expenses we specifically mention in the act that should reduce your expenses so that your profit will be high, and the same way your carbon tax will be high. Do you get it?
All right. Yes.
Yeah.
All right. Thank you.
All right.
Thank you, sir.
So, okay, me.
Good evening, sir.
Yeah, good evening, Chief.
I'm female.
Chief Mrs.
I missed her, but okay. So my
Chief
first
Mrs.
question.
All right.
My first question. In PIA, every question we get, does it mean that we are going to compute for PIM, petroleum tax, and solve for company income tax too, or only if the
Yeah. So for
expenses need to
marginal,
be transferred on?
so the marginal and for marginal fuels and prospecting license, you have to compute, right? So the act specifically,
That's wrong.
so Abayomi, please help us.
Oh, so sorry for that,
Abayomi.
please. Sorry, I'm so sorry.
All right. So I was saying that, to be honest, I've lost my track of thoughts. Ukeme, can you please help me?
Marginal something. Say marginal
So I was saying
something
that
something.
typically for prospecting license and marginal field guys, you have to, yeah, you have to, what's the name now? You have to just compute. You have to compute for them. Does it make sense? Because they are the core guys in the upstream. Yeah, the core guys in the upstream industry. Does it make sense?
How do you know which one is marginal prospective
No,
license
the
company?
examiner will tell you. The examiner will tell you to be in the question.
Okay. Sorry, number two
But
question.
to be
In
safe, to be
okay.
safe, any company that qualifies for hydrocarbon tax would definitely pay company income tax.
Okay, why didn't we solve it in the first question?
So the first question, the examiner did not ask us to compute tax liability. It was the introductory stage. We were just introducing it to the students, so they didn't want to bring something more huge at that point.
Okay. All right. Second
So
question.
last that the first that yeah, go ahead.
Oh, you were saying something. Continue.
So at that time, they were just introducing the whole thing to the students. So they didn't want to bring up a lot of information. Imagine introducing something to the syllabus and there's a lot of information you have to juggle with. Do you get? So that's why they
Yes, sir.
didn't. That's why I think they didn't include it at that point. But I mean, it's very much getting to the saturation point. Everybody should be aware of PIA. So expect anything from the examiner at this point.
Okay, sir. Thank you. Cost profit ratio. I don't know if
Yeah,
I saw it mistakenly, but I noticed you added capital allowance to it. Aren't you supposed to deduct it
I didn't
when
get
you
you.
were solving cost profit ratio before you
Yes.
restricted and found lower? I noticed that you added capital allowance instead of subtracting. Or did I say
No,
wrongly?
you should. No, you should add capital allowance to your allowable expenses because technically, yeah, what happens to capital allowance? Capital allowance is more or less like your allowable expenses, and I will explain how it looks like that. You know, then generally you disallow depreciation, and
Yes.
capital allowance is always in place of depreciation.
Okay.
So technically, you could say that capital allowance is still part of the allowable expenses technically, because we are only using something a conventional way of computing depreciation, and that's what your capital allowance is.
But depreciation is disallowed.
Correct. So capital allowance is what you use is allowable instead of depreciation. Does it
Hmm.
make sense?
I'm confused though. Disallowed, sure, we
Okay.
don't use to add
So
it.
depreciation is disallowed. So
Okay.
just like how do I put it now? You have two things, yeah, that you can select between. So your
Okay.
capital allowance is used in place of depreciation.
Correct.
So because capital allowance is used in place of depreciation, so we don't want depreciation. That's why we are disallowing depreciation, and then we are allowing capital allowance in place of depreciation. So the job of capital allowance, like the job of every other allowable expenses, is to reduce your profit.
Okay. So
Do
that's
you
why I
understand?
added it to allowable expense so that
Exactly.
we able to reduce the
Exactly.
profit. So in this other side,
Exactly.
why did you now subtract it when you now finished with the CPR? You now
So
subtracted capital.
at that point, it just follows your normal tax computation. You know, immediately you get your accessible profit, even under CIT, you deduct capital allowance.
Okay.
So that's
Oh,
so like I said, that CPR computation is something different on its own. Doesn't have to do with it's just a place where I select between the two and then plug it in into the question. So it doesn't really affect my flow of computation.
okay.
All
No
right.
problem. Thank you.
Thank Tawa Abdul. Tawa Abdul. Okay, Oluchi DK. Oluchi. Okay. Oluchi. Okay. Usman Mohammed. Usman Mohammed.
Good evening, sir.
Yeah, good evening, Chief.
Yes, sir. Thank you for for exposing all these courses out for me, most especially. Yeah. Uh, well, I'm confused about this course this evening, but hello,
Yeah.
sir. Can you hear me?
I can hear you. Please go ahead. Welcome.
On this uh CIA hydrocarbon tax most importantly. Other operating other operating costs is not part of revenue. other operating profit or other operative revenue as attached in some of the questions. Are they not
Yeah,
supposed
it's
to
part
be
of.
part of?
They're supposed to be part of revenue.
Okay, there is this. I was laying my hand on one too, and I got confused. One question in 2024. So I don't know when you get there.
Yeah,
So
so maybe I'm sure we'll get there. So maybe we should just be patient enough with us to get there so that
okay,
we don't, yeah, we
it's
don't
okay,
jump.
it's
So when we
okay,
get there, we'll see reasons why they treated the way they did, or we are judging them wrong. It'll be true.
it's okay. Thank you very much. I'm sorry.
All right, thank you. Okay, Deborah. Okay, Afolabi, Comfort.
Good evening, sir. Well done. Yeah.
Thank you.
What I want to ask is about these allowable expenses under the computation of CPR. Why is it different from the total expenses we computed?
I didn't get you. Sorry.
The allowable expenses under the workings of CPR after the
Okay.
computation of 65% of gross revenue, then the expenses that
Mm.
we added a capital allowance with. Why is it different from the total expenses computed initially?
So it's just there are some things that you allowed under the normal computation you did, but you later added back this time around. That's why it's different. So this is what I'm saying here. So your normal expenses was 274,
Yes.
right? Or where is it? Yeah. The normal expenses should be, where is it? Sef? Should be 279,039 or 274,536. But then you're adding back some things that were initially so some things were here.
Sorry, sir. This 274 is
Yes,
not what we got up.
is what we
Scroll up.
got up now. Is it?
Okay, okay. This is what we brought down.
Yes.
Okay. All right, sir.
All
It's
right, thank
clear.
you. All
Thank
Good
you, sir.
right.
evening, sir. I was talking when you called. Can you hear me?
Yes, I can hear you now, Deborah.
Okay, yeah, good evening. Okay, so I want to ask a question. The heading for computation of hydrocarbon tax liability, you wrote 2021 assessment year. So I want to confirm, is it not meant to be 2022 assessment year? So it's
So
under
hydrocarbon tax is
okay.
actual year basis, CIT preceding year basis.
For hydrocarbon tax.
Yes.
I think you should confirm that because I just confirmed again too, and I was saying that is for Peter that is actual year basis, but
Okay, hold on.
hydrocarbon is hydrocarbon is on preceding year basis. Maybe you should confirm.
Okay, I'll do that. Okay. All right. Okay. I'll do that. I'm currently doing that, but I should complete that. I'm surprised that she's saying hydrocarbon tax is on proceeding on this thing, but then
Yeah, according
let
to
me,
the PIA and
yeah,
the new, oh, I just
according
want
to,
to yeah, petroleum insurance.
don't worry, I will get that across. I will when I see. I mean, it's not a big deal if it is at PM proceeding basis. I admit we are here together.
Okay,
So
thank you.
just want to confirm that. Yeah. So when I
I'm
see
surprised.
anything, I will let you know.
Hydrocarbon is
So no
actually
bunk.
a basis, while company income tax is.
Preceding, that's what I know too, but I mean,
Yes, yes, you are right. You are very right in that area.
uh,
Hydrocarbon is actual.
yeah,
Why
I'm
PIT
surprised,
is
but I mean, everybody's, so that's just,
actual year basis. I
but
have the notice.
I think the person that asked that question is looking at the Pathfinder solution. On Pathfinder
that's,
solution, it
it's
was
always on
written
PYD.
2022,
Yes, I think so too.
but it's
But
on
then,
actual year basis.
I recover tax should be on actual basis. That I know, but then my head can still be wrong. You get,
Because even when we were
all right,
under PIA, it was actual year basis paying in
under
installment
PPT,
from
under
March
PPT
to
is, yeah, under
um,
PPT it was
yes,
actually basis installment, 4 quarters.
installment. Yes.
Yeah. Okay, no problem. Yeah, Amadi.
All right. Good evening, sir. Good evening, everyone. So quickly, my question speaks to the computation of hydrocarbon tax. So I noticed you added capital allowance to the allowable expenses and still went ahead to deduct it again. I just needed more. You've addressed the question earlier, but I needed more insights so that we can dimension these things properly when we see them in exam hall. Thanks.
Okay, so sometimes when you say clarification, I'm even confused because I'm confused. But then let me see what I said again. Possibly, I just need to reiterate my point. So when you are computing for the cost profit ratio or cost price ratio, sorry. So what you should do at that point, the best way to approach the cost price ratio is see it as a distinct solution from what you are doing before. So technically, your allowable expenses is X amount. The work of any allowable expenses is to reduce your profit, and capital allowance will serve that purpose too. That's why it is added to that. While for your your tax computation, it follows the same flow. After you determine your accessible profit, you deduct capital allowance. So there are two distinct solutions. So it doesn't change anything altogether. That's what I'm saying. So it's not as if I'm double counting it. At my CPR, what I wanted to achieve was just to be sure that okay, I'm picking the correct, I'm picking the lower of the 65% of revenue and allowable expenses less exempted items. Have I clarified?
Yes, sir. So further to the question, sir, if in the event that the cost price ratio, right, was lower
Mm.
compared to the allowable expenses, so we'll switch, right?
No, the truth is that at no or no occasion will the I think will what you get at the cost price ratio will be lower than what you have as the liable expenses. Because now, if you look at what you are computing, what you are comparing technically, you realize that it is the lowest of two figures, comparing your allowable expenses after adding back a lot of items and 65% of revenue. So it will not, it will definitely be lower than the allowable expenses, I believe. Do you get what I just said?
All right, thank you, sir.
Yeah. You're welcome. Another question? Okay, sorry. Let me follow my Ibrahim.
Hello, good evening, sir.
Yeah, chief.
Okay, yes, mine is sorry. It's as if I'm taking you back, but with this PIA now, does that mean the computation we do under PPA before when the revenue is not given directly, the computation that we use posted price and uh, this LLF
Okay,
and
your G factor.
LFR. Yes, that G factor. Does it mean they're no longer applicable? Thank
G,
you. That's what I'm.
yeah, G factor is no longer applicable.
Okay. Okay. Thank you.
Okay. At least that one don't leave your neck now, Abi.
Yes. Yes.
Latifa.
Hi, good evening. Hi, good evening.
Yeah. Good evening, chief.
Sorry for your
Yes.
additional information. Question 2. It didn't included 85 for others.
Yeah.
For additional information, question 2. It didn't
So
included
and
85.
yes, I didn't include 85
Okay, come back.
because yeah, correct. Because the for common income tax, you said. Is it for common income tax you're asking, Latifa?
Yes, for company income tax.
Okay. So ideally under common income tax, yeah, anything that has to do with anything that has to do with your R&D. R&D. The standard R&D basically, if it has to do with your research and development, which is what this one looks like, right? Because it's purchase of information, so it's more or less like your research and development cost. So your research and development cost is capital in nature in the context of CIT, and so CIT is saying that you have qualifying research and development costs, so it's disallowed under CIT.
Okay, thank you. For rent in hydrocarbon tax, is it allowed? Is it allowed or disallowed?
For what?
Rent in hydrocarbon tax, is it allowable expenses or
Rent.
disallowed?
Rent, Abi?
Yes. Yes.
Rent is allowed. Rent is allowed.
Thank you.
You're welcome. All right, Chioma.
Okay, good evening, sir.
Good evening, Chief.
Thank you much for the class so far. So my question is, for the net eligible expenses, we picked the IR of what are we comparing it with? You said we're picking the IR of net eligible expenses, and I didn't get that.
And 65% of revenue.
Okay. So my other question is for the balancing charge. So we are going to less it from the gross revenue, right? Are we lessing or adding?
Your balancing charge.
Yeah.
Your balancing charge,
When we
you add it
started,
to gross revenue.
okay, we're adding. What if we add balancing allowance?
You deduct. No, you deduct. You add it to your capital allowances.
Which one, sir?
Add your balancing allowance to capital allowances.
So it won't be added to the revenue.
Yes.
Okay, but okay. So how are we to calculate the balancing charge in case we have it?
So balance charge is always the difference between the sales proceeds of an asset and the tax incident value of an asset.
Okay. All right. Thank you very much, sir.
Yeah, you're welcome. Okay, so sheet two, Amidat.
Yes, Miss, can you hear me?
No. Yes, yes, I can hear you, Jerry.
Okay. So the exempted item, when preparing for the listing over there, those listed item, can we have like another like additional item, or is I don't know what is there like formats for those items that we can just check, then we can compare like, okay, do we have all this, or the one you list are the only one that we have to check? You listed like five that was in the question, or we can actually like see others that is not in that question, which is among the exempted item. Can we get like a format for it so to know?
So in the notes you will get in the note I'm sharing with you, you will have a format. And then in the next class, I will also solve a broad more questions with you. But to be honest, that's just basically it. That's basically it. Is your rent royalty, control to any fund, your host community fund, environmental remediation fund, and any disease charges. That's basically what you
Mm.
have.
Okay, thank you.
Yeah. Then okay. Ufoma, blessing. Okay. Judith.
Good evening, sir.
Yeah, good evening.
Thank you so much for this knowledge tonight.
You're welcome.
It's really helpful. Yeah, I appreciate. Okay, quick one, sir. When computing for this cost price ratio, for instance, we brought down the gross revenue already computed and then restricted to 65% of the gross revenue. So
Mm-hmm.
as at what point now are we using it? Because after which we computed the liable expenses, adding the capital allowance, and we deducted the exempted items from the summation of the liable expense and the capital allowance. So as
Look, I
at
cannot
what
hear
point are
you
we now
again. Oh.
using? Hello, can you hear me now?
I can hear you now.
Okay, I said, at what point are we now using this restricted value of 65%? Are we comparing it? Are we comparing it with the net eligible expense and the restricted 65%?
Yes, so that's the two things you are comparing: the net eligible expense
Okay.
and the 65% of revenue. So whichever is lower of
Okay.
the two is what you pick.
Okay, that's why I will now pick and then subtract from the normal flow of a computation of hydrocarbon tax.
Exactly. Exactly.
Oh, okay. Okay, sorry. Okay. Sorry, I am quite confused about this PIA and petroleum profit tax. Is it that there's a change? There are changes. I don't know. I'm lost, please.
It's not changes, it's a complete overhaul. So don't look at it as changes, just look at it as complete overhaul, right? That they're trying to they've overhauled everything. Is a revamp, a total revamp. Does it make sense? So if you look at it
Okay.
from that perspective, it will be easier to learn. So it's not that you're trying to, so
Come
just
again,
forget
sir.
everything under PPT and then just do
Okay,
anything on that.
PPTA. Okay. So what
Yeah,
I'm saying, no need to start no need to start getting the value of chargeable oil disposed.
oh no. All those G factor allowance and all of those things is not necessary. Again,
like posted price
No, all
and
those
all
things.
that. That way,
That's what I'm saying. Not necessary again. You're welcome. You see, you're happy now that
okay,
they've
sir.
lifted the burden off you.
I'm happy, yeah. Yes. Thank you.
So, Enobong. Okay, Obafemi. Joy. Oriyomi.
Hello, good evening, sir.
Yeah, good evening.
Okay, so my question is,
Hello.
why did we compute the cost profits tax in this one, and we did not do it in that other first question? And also, how do we know the exempted items?
So the exempted items are basically those things I listed, really. So you may just want to
Okay,
cram, or I don't want
cram
to use the
them.
word cram, but
Okay,
you may just want to know them, right?
okay,
But for the why, at the first time the icon was setting the question, I can just set
yes,
the question to introduce people to the topic, right? So it's not a
okay,
complex. It wasn't yet complex at that time. That's why the cost price issue wasn't. I didn't bother doing it at that time because it's not
okay,
a complex stuff. It's just a kind of introductory kind of question. And you would imagine if I start solving cost price issue at my first illustration, I would have thrown a lot of people off balance. Do you
okay,
get?
okay. So any
So
question we
that's
get
it.
now, we need to solve for the cost price
Yes,
issue.
you need to talk about the cost price issue.
Okay, thank you so much.
You're welcome.
Okay,
Sir,
hello,
can you
sir.
hear me
Good
now?
evening, sir.
Yes, I can hear you. You're not bong.
Okay, yeah, good evening, sir. Okay, so I want you to confirm, right? So when you were solving for the allowable expenses for company income tax, you included all the allowable expenses you previously calculated for hydrocarbon tax. Then you
Yes.
added others like finance cost. So are you saying that all the allowable expense in hydrocarbon tax are allowable expense in company income tax?
Yeah, save for stamp duties.
Okay, all right, sir. All right, thank you, sir.
You're welcome. All right. Yeah, I think I've answered everybody.
So before you go, I have a question.
Yeah, please go ahead.
Okay, cost
Am I supposed to
secured.
go? Am I supposed to go? I'm supposed to teach you another topic.
Please, let's have another one.
Please, cost
Because
secured
I've got,
in
Another
seeking
different topic,
information
please.
for. Are you still with me?
Please,
yeah, I'm with you.
Cost secured is seeking information for oil deposit. Is it allowable expenses or disallowable expenses?
What do you say?
I mean, cost incurred in seeking information for oil deposit. Is it allowed or disallowed?
Disallowed. Disallowed.
Okay.
Except where it is geo in nature.
Okay. So, what is the difference between rent and concession rent?
They're largely the same thing. But
Okay,
concession
thank you.
rentals is just they're largely the same thing. Yeah. All right. So let me
So are
go.
you introducing a new topic? Because you just
I
said,
mean,
sir, excuse me, sir. Are you
yeah.
introducing a new topic? Because you just
No,
said, are you going or are you supposed to I'm asking because if you're
I'm
introducing a
supposed
new
to.
topic, it's not better we finished solving this
No, I'm supposed to
particular
solve one more
question
question
on this topic because you
because
said you are
the
still
my
going to
preparation
still have another.
to make sure that I want to conclude my PIA today. So next
Uh-huh.
week, I mean my next class on Thursday, I treat other topic like
Okay.
mining and
Okay.
capital gain tax is what I want to do next. Basically,
Oh, okay, sir.
I want to be sure I seal everything tonight.
Okay, sir.
Oh, you are good to go. You can do others on your own now.
No, no, we cannot.
All right. So that's fine. Thank you very much for now. If you still have questions, I believe you will stay with me. The next question should take me approximately 1 hour. So by 11:33, we should be off, I believe. Is that fine? So let me prepare your mind though.
Let's move
Yes,
on. Let's
yes.
move on.
Yes,
Let's go.
yes, sir.
Okay.
Let's go.
Please
It's
don't,
fine.
We are
please don't
with
leave me
you.
alone. Oh, it will be painful.
Let's go. We are with you.
Yes, sir. We are not leaving, sir.
Okay. Thank you.
Mr. Mike, please, you can mute everybody now, please. Apart from the
Yes.
chorus.
Bro. All right. So you're supposed to be on exam leave already now, aren't you? I'm doing. I'm supposed to be complaining that tomorrow is Monday, not students. Right. So let's move on. Still following that, right? So I dealing with November 2023. And please don't. So November 2023 question 2. So please read.
Okay.
As
Requirement.
required.
As okay, so do you want to read?
Question what now?
Go ahead.
November
Question
Yes.
2.
23.
Okay, thank you.
Okay.
Required. As a company tax manager, you are to prepare a report to the managing director showing in line with provision of Petroleum Industry Act 2021 and Company Income Tax Act 2004 as amended. A. The hydrocarbon tax. B. Company income tax payable. So please cool. Okay, Bras Petroleum Producing Company Limited has been operating as an oil prospecting company in Nigeria for 15 years. The company operates in both onshore and shallow water in the cocoa areas of Niger Delta region. Following the provision of Petroleum Industry Act 2021, the company applied for and was granted a petroleum prospecting license on January 1st, 2021. Extracts from the company's financial records for the year ended December 31st, 2021 reveal the following. All figures are deemed to be correct. Surplus screw. The following additional information was given. Value of crude oil sold. Value of condensate from associated gas sold. Value of gas liquid from associated gas sold. Drilling costs incurred comprise tangible drilling costs for first exploration well, drilling the first two appraisal well. Then we have repairs and maintenance. Then losses brought forward from last year was 655 million. So please school. Capital allowance computed brought forward 320 million for the current year. One for then production allowance after commencement of the Petroleum Industry Act was 3,300 million. Assume 425 is equivalent to $1. That's it.
Wow. So makes sense, Abby. So thank you very much for reading. Let's get into it. So brass petroleum computation of hydrocarbon tax for what year of assessment? 2022, 2021 year of assessment. Are we good to go? All right, so we have crude. This examiner must be a woman. A woman that will tell you leave me alone, but in reality, what she's saying is come and stay with me. So now this woman did something funny. She computed here, but then what she did is she now gave you a breakdown. So what he wants you to do is to solve it by yourself and recompute the revenue. Does it make sense? So anytime you see breakdown, always use the breakdown to determine the revenue. So determination. Are you with me, please? All right. Determination of gross revenue. So don't forget you are picking the higher of the fiscal price and the posted price. So we have the value of crude. We have the focados. And how much is that? You have 72 times 6.2 times what is the exchange price? 425. What do you have, please? So we have value of liquid gas. I know value of condensate. Right. So we also condensate. That's 30 times 3.7 times 425. Then we have value of gas liquid. We have Pennington. That's 35 times 2.8 times 425. I think that's all right. Is that all? Am I alone?
No.
Yeah, figure me. Figure me.
Okay, the first one is 189,720. 720.
189,720. Next one.
47175.
17.
47, no,
17.
47.
47.
Okay, 47.
47. 175.
175. Okay.
41650.
41650.
What do you have in total? Please help me.
278545.
78545. So I would say my gross revenue 78545, right? Add balancing charge. Do you have any balancing charge in this question? Do you have any balancing charge? Yeah, we have 32. Abi, are you with me? Are we together?
Yes.
My co-hosts are not with me again. Oh.
Yes.
My
We are
co-hosts are giving
together.
up. Don't give up. Oh.
Yes, we are
It's too early.
prepared.
Oh.
278,577.
Total gross revenue. What do you have? 278.
Five five
577.
Five
seven
what?
seven
577.
7 7 double 7.
Less allowable expenses. So you have your production cost, Abby. 106,470. Cost of gas reinjection wells. How much do you have? 600, Abby. Drilling costs incurred for 360. Then you have depreciation disallowed, decommissioning, and abandonment. How much is that? 1,900. Repairs and maintenance is usually a junk site. I mean, so you want to be sure. Check.
The additional information 5.
Okay.
Repairs
So
of
this
plant,
is
machinery, and assets. Repairs of alteration of production payment utensils.
so repairs. Both of them are still repairs, so it's allowed. So you have 5,750. But something you want to be wary of, to be honest. Something you want to be sure you are picking the right figure. Royalty cost. How much is that?
4990.
The next one, NDDC
Niger Delta
charge,
Development 250.
250 Abi.
Yes.
Finance cost is disallowed. Terminaling is allowed.
1380.
Um, 380.
380.
Right. Then donations recognize charity or disallowed.
Disallowed.
Concession rentals is allowed.
Disallowed.
Concession rentals is allowed.
Okay.
Donation disallowed. 2470. Host community fund is allowed. Right. Then local government levy.
Municipal levy. 100 naira.
100 Abi.
Yes, 100. Environmental remediation fund.
Cost incurred is sea killed oil deposits. It should be disallowed. But let's see what is there any geo there. What I'm looking for.
Cost incurred.
Did they give us a breakdown?
I've not seen it.
So if you know this oil deposit is something you have to be careful of. It's only the geo part that is allowed though. So if you are not seeing geological, geophysical, geochemical, it's disallowed. Yeah. So anything that tells us it is geo, I can't see any.
Yeah, I can't say so.
So what's your total allowable expenses?
184,690.
690.
You are eager to go. So working is right. Now you have to restrict it to your CPR, Abby. Cost price ratio. So cost price ratio. So you have your gross revenue. How much is it?
278,545.
278,545. Right. Maximum allowable or restricted to 65%. What do you have?
181,054.25.
Hmm?
181,054.25.
0.25. Okay.
25.
Yeah.
25.
Yeah. Thank you. Right. Then you are now comparing that with your this thing with your what's the name now? Reliable expenses. How much is your reliable expenses?
One 184,690.
184,690, Abby.
Yeah, 690.
Okay. So add your capital allowance. How much is the capital allowance? 1720, Abby.
Yes.
So what's the total?
186 is 410. 6 or 10.
All right. Less exempted cost, right? So let's start with our rent. Do we have anything like that? I believe. Concession renters, Abby.
Yes. You have NDDC charge.
How much is your concession renters? 20.
20470. 470.
You have royalty. How much is royalty?
4990.
40, 90. NDDC charge.
250.
That
250.
50. Mediation fund. Yeah.
Remediation fund.
What is that?
Remediation fund 1420.
1420. What other thing do we have? What other thing do host community fund? Do you have anything like that?
Yes, 1000. 1000.
Any other contribution to any fund? That's all I do.
Yes, sir.
So what's the total?
64,130.
64 30. show your eligible expenses. What do you have?
122,280.
122,280. So don't forget you're picking the lower. So obviously you're picking 122,280. Eligible. I have my adjusted profit. So do you have?
Can you take it off? Let's see the revenue.
156,297.
697, Abi?
Yes.
Less loss relief. How much is the loss relief? Do you have any loss relief in the question?
Yes.
So you have 655, Abi? Accessible profit. How much is it?
155,642.
Like this, Abi? Less
Yes.
capital allowances. How much is it?
1720.
17. Right. So they have
153,922.
5392. Less production allowance. How much is the production allowance?
3,300 million.
Chargeable profit. Chargeable profit is
150,62.
150.
150.
Yeah.
622.
622. So you want to be sure what's the license the company has, right? The company has petroleum prospecting license. That should be 15%. Let's check. Petroleum prospecting license is 15%, right? So you say petroleum prospecting license 15%. You say hydrocarbon tax at 15%. How much?
So, 2593.3.
25.
22,
22.
593.3.
93.3. Like this.
Yes.
Yes.
Okay. All right. So now let's go to company income tax. Definition of company income tax for identity of assessment, I believe. Let me be sure. It's true. Right. We have our gross revenue, Abby. How much is it?
Two 278,577.
Isn't changing anything really. Right. Let's.
Sorry, sir. Sir,
Yeah.
please. The cost price ratio, the gross revenue we use, is it we are supposed to use to compute the cost price ratio? Is it including the balancing charge?
No, no, it's excluding the balancing charge.
So this one we're using for the CIT now, is it including the balancing charge?
It doesn't. It doesn't really matter. It doesn't really matter, really, but it really doesn't matter for company income tax because at the end of the day, it's you will still have to include your balancing charge in the adjusted profit. Do you
Because now the
understand?
figure I'm giving you now is including the balancing charge. This is the
Okay,
total
let me
gross
separate. Let
revenue.
me just let me separate it for clarity.
Okay.
Let me separate it for clarity. But you will see that it really doesn't matter. But for the sake of clarity, allowable expenses. A 84690, right? Are we together?
Yes.
Are we together, please?
Yes.
Hello?
Hello.
Yes,
Are
we're
we
together.
together? So now let's
Yes.
check. Let's check. Is there anything that we disallowed that should have been allowed under CIT? Yes, we have finance costs, right? 510. Another thing, we have donations. How much is donation? Another thing, is that all? Please, is that all? Is that all?
Sir,
I
sir,
think
for the other
so.
information, it's not allowable to know.
Which one?
Other information.
Which one is other information?
Just go to the no the statement. The statement. Yeah. Cost
No,
incurred to give
it's
information.
disallowed. It's disallowed. It's like your research and development is disallowed. All right. So figure me now.
That's 640.
Hmm?
510 plus 130.
Mm-hmm.
640.
647.
Yes.
No, it's not including the allowable expenses under
Okay,
PI.
it's including the 184,690. Sorry. Let me add the 184,690.
185,330.
85.
185,330.
Like
Yes.
this, Abby.
Yes.
Yes.
So what do you have?
93215.
9?
3.
93215.
93215. Right?
Yes.
Yes.
Right.
Yes.
This is adjusted. Voltage. So add balance charge. How much is the balancing charge?
32.
32.
How much is that? 93.
9592.
93247.
247, Abi.
Okay.
Yeah.
So let's
Yeah.
loss relief.
Plus,
How much is the loss relief?
655.
Nine two five nine two.
92592.
Right, there's capital allowances. How much is the capital allowances?
Brought forward 320.
Total
For the current year, 14.
1720. Everything, just let me add everything together.
1720.
Yeah. Total profit.
9872.
Hmm?
9872.
872, Abi.
Yes.
Yes.
872.
CIT at 30% of
Total profit.
total profit. Sorry, step more that it is sorry, collect. Figure me now, please.
2726.
Eh?
2726.
27.
2761.60.
0.6. Then TT at 2.
261, not 250.
Wait, 27, 261
Yes.
0.60.
of accessible profit. What do you have?
You have 2330.37.
2330 point what?
38 approximately.
Point
Okay,
38 approximately. So total tax liability
29591.98.
2959
591.98 or 593. 593.
Yeah. All right. That's all. Any question? So I've sent
That
the
the accessible profit. Please go back to it. Is it not 92592?
92,590. No. It's before loss relief.
Okay.
Your
Okay.
adjusted profit is always the adjusted profit will
Okay.
always double as a zero profit.
Okay. Thank you.
All right. So that's it. All right. Okay. All right. Okay. So let me attempt your questions now. All right. So, Florence, you've asked your question, I believe.
Oh, sorry.
Mm, no problem. Yeah, Obafemi. Yeah, Musa Shehu. Okay. Musa Shehu. Kemi Oluwatoba.
Okay, good evening, sir. Good evening.
Yeah, good
Can
evening.
you hear me?
Yes, I
Okay,
can
the
hear
last
you.
question, yes, the last question we solved on hydrocarbon, we used 30% for hydrocarbon
Yeah,
tax. And this one we just solved now, we use 15%. I want to know the
yes.
criteria between the 30 and the 15.
So the criteria is basically what is the nature of the license the company has. So if it's a prospecting license, it's 15%. If it's mining lease, it's 30%. The prospecting license and marginal fee, which should be 15%. But to be safe, on the final page of the question paper, right, you will have the tax rate for each of the categories.
Okay.
The license, the examiner will tell you the license to the question and pick and then pick the rate that belongs to that category.
Okay, sir. Thank you.
Yeah. Okay. All right. Chioma.
Okay, thank you, sir. Sir, my question is under the cost price ratio. Please, can you go back to that, please, on your screen?
It's like you and cost price issue. You have a team for cost price issue.
Sir, in the previous question, you picked the higher of
I picked
65%
the
of
lo- I picked the lower. I've always
is it
picked the lower.
okay. I thought it was the higher of you picked.
No, I wouldn't have picked the lower. So it's the lower of the 65% of revenue and the eligible expenses, the net eligible expenses that you select.
Okay, all right. That's all. Thank you, sir.
All right. Then the next person, I have Emmanuel Jimson. Amadi.
Yes, sir.
Okay.
Thank you, sir. Yeah,
Yeah.
as regarding the CIT, my question is this: in texting for the TET, I mean the education tax under hydrocarbon, uh, in respect to our CIT, a situation whereby the year that is tested by ICANN, such as probably 2000, yeah, 2021. Are we also using 2% for our education tax?
No,
Something like
no,
that.
no, no.
Okay.
Mm. So, like I said, I've said it before, I'm saying it again. The year determines the tax rate to use. The year is what will determine what's the rate for TET. 2021 below, 2018, 2019, 2020, 2021 is 2%. 22, 2023 is 3%, and 2.5%, beg your pardon. 23, 24
August.
upward is 3%.
Okay. 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 Thank you, sir. That's- Wow.
All right. Is that Emmanuel I just answered?
Yes.
Okay, thank you. So, Amadi.
All right. Good evening, sir. Thank you very much for the lectures. So I have two questions. So the first one is the tax rate for CIT under Petroleum Industry Act. The rate, is it determined, is it a function of the turnover or is it fixed at 30%? That's my number one
For common
question.
income, for common income tax or hydrocarbon?
Under Petroleum Industry Act.
No, it's
The
not dependent on revenue. Those guys do well in revenue, so you don't expect it to be based on any threshold. It's only the CIT that there's classification of companies. Do you get
Okay.
it? Yeah.
Okay.
Every oil and gas, any operator in the oil and gas sector is not a small boy. So I don't think there's need to even classify revenue.
Okay. So thank you. The second question is, I noticed you didn't compute TET under hydrocarbon.
Yeah,
Is it
it's
deliberate?
only it's CETA that allows for TET, not PIA.
Okay, thank you.
You're welcome.
Hello, Mr. Michael.
Yes, ma.
The TET 2.5% up to August 2022 take effect from September 2023 is 3%.
Yes, so but when that's 23 September accounting year.
Yes.
So invariably
2.5 up to August
yes, I
2022.
understand that. No, August 2023, oh,
Yeah,
because the act was
August 2023, yes.
yes, the act was signed by Tinubu in 2023 September.
Yes.
So, but invariably that is already 2024 year of assessment.
Okay.
That's why I didn't stress more on that. But thank you for bringing that to. It was first signed in May before Buhari left. Tinubu came and then first penned it, then re-signed it again in September. So effective is September 2023. But September 2023 accounting year becomes effective 24 year of assessment. The same thing with investment allowance.
Okay.
Do you get my explanation?
Yes.
Yes, that's what I'm saying. All right, Benjamin Chuku.
Yeah, thank you very much, sir. Please, I just want to reconfirm this TET, is it on adjusted profit it's calculated on or accessible profit?
Adjusted profit doubles as accessible profit. I know where you're coming from, but let me tell you again. Adjusted profit doubles as accessible profit.
Okay, so what's the name of the figure we arrive at after deducting loss relief from
It doesn't have
adjusted
a
profit?
name. It
Okay, it
doesn't have
doesn't
a
have a
name.
name.
It doesn't have a name. I know that's where you're going to, but then
Okay.
I just wanted you to land safely.
Okay. No problem.
So your adjusted profit doubles as your accessible profit every time for common income tax. So Latifa,
Are you saying that adjusted profits and accessible profits are the same?
that's what I'm saying.
Oh, okay. Sorry for the exempted item. Is there a way we can know it without not qualming it? Like exempted item for hydrocarbon tax?
Is the way you can know it. Just know the items.
They are just five, right?
Yeah, that's just that's basically it.
Okay, thank you.
So your NDC charge, royalty rent, and contribution to any other fund. All right. Emanuela, Olusheyi, Judith.
Good evening, sir.
Good evening, Chief.
Ah. Okay, sir, please,
just to reiterate what you said, or just to assume if what you said I actually got it right. For TET now, that's tertiary education tax, 2% as at before 2020, 2.5 after
No,
2020.
before 2022.
Okay, before 2022,
That's
2%.
2021 below.
Okay, 2021 below.
Mm-hmm.
All right. Okay. Why 2.5 after 2021 to August 2023?
Yes,
Why 3% September 2023 to date?
exactly.
How about the investment allowance, sir?
Investment allowance has been scrapped beginning from September 2023.
Okay, September 2023,
There's
investment
nothing like
allowance has been
investment
scrapped.
allowance.
Investment allowance is
Yeah,
only on is it not only on
plant and machinery and plant and equipment.
plant and machinery
Yes, and plant and
okay
equipment.
and plant and equipment. Okay, thank you, sir.
Yeah, but it has been scrapped. Yeah. Fola Shade.
Yeah, good evening, sir. Thank you very
Yeah, good evening,
much
ma.
for your support. Yeah, my question is on these net eligible expenses. We've already calculated
Yeah,
all the allowable expenses, and I'm seeing that we're not using it. We're not bringing in the net eligible expenses to deduct from the gross profit. I don't know why.
because that's what the law provides. That you should always use the net eligible expenses every time.
So the net eligible, I was thinking that we are comparing it to the
What's
65%
it?
of the restricted. The 65% of the restricted. So is it that there are three of
I,
them that we're comparing or two?
I'm not sure I got you.
Okay, now we have, you said the net eligible expenses, we are the lower of the one of 65% of the gross
Mm-hmm.
and the net eligible. So I'm looking at the allowable expenses itself. The,
Yeah.
allow- the allowable expenses. So it doesn't mean that we're now comparing the three of them. The 65% of the gross, this net eligible, and the actual allowable
Mm,
expenses.
no, technically no, because your allowable expenses form the basis for your eligible expenses. So in variable you are still comparing is the cost price ratio and your eligible expenses. Also, your eligible expenses will always be lower than your allowable expenses because you're adding back a lot of items. You're deducting a lot of items from it. Do you understand?
Okay.
So your eligible expenses will always be lower than your allowable expenses. But what you are comparing now is the eligible expenses with the 65% of revenue.
Okay.
Yeah.
Okay.
But
All
your
right.
allowable expenses form the basis for the eligible expenses.
Okay. Okay. Thank you. Okay.
All right. Okay. Olive.
Yes, sir. Good evening, sir. Sir, can you hear me, sir? Hello?
Olive.
Yes, sir. Can you hear me, sir?
The network is breaking. I don't know if it's from my end.
Okay. But can you hear me now, sir?
Yeah, I can hear it's better now.
Okay, sir, please. I want to confirm for this investment allowance, I thought it has been scrapped. That if we are given a question now and we are to compute capital allowance and we have plant and machinery or plant and equipment, we'll have to still charge our investment allowances on them. Hello, sir.
Can anybody else hear her? I can't.
Hello?
We can hear you.
Hello, sir. Can you hear me now?
Hmm?
Should I repeat the question, sir?
Yes, please go ahead.
Okay, I said for investment allowance, I thought it has been scrapped. So my question now.
Yes, no, it has been scrapped. That's it's not your thought. You know it has been scrapped.
Okay, I know it has been scrapped. So, but I am a bit confused when we still have to compute when we are computing capital allowance, and I see us charging investment allowances for plant and machinery and plant and equipment.
Laws do not have retrospective application.
Sorry, I didn't get that, sir.
Laws do not have retrospective application. So you don't apply laws backward, you apply it forward.
Okay, prospectively.
Yeah.
Okay,
Does it make
but
sense?
yes, sir, but the ones we charge the investment allowances, like the questions we solved some days back, does it mean it has to do with the year? The
Yeah, it
year.
has to do with the year. That's what I'm saying. So the year informs you whether or not to compute.
Okay, okay, okay. Thank you
Yeah.
very much. It's very clear.
You're
Thank you.
welcome. All right. Joy.
Good evening.
Good evening. Oh.
My question is in respect of this hydrocarbon tax.
Okay.
I want you to throw more light because, like this question that we are solving, it talks on onshore and shallow water. If in the course, maybe in the exam hall, we come across a question that talks about deep water, what percentage are we to use? Should we still use this 15%, or is there a percentage we use in calculating that hydrocarbon tax? Because I think
No,
in all we have onshore, shallow, and deep waters.
it doesn't really matter. That doesn't determine the tax rate. What determines the tax rate is the nature of license, which is either marginal fees, mining, or prospecting.
Okay, sir. Okay.
Yes, I come again, sir. You said, yes, sir. You said, hello. Hello, sir.
He said it doesn't matter the location, whether offshore or deep deep waters or
Yeah,
shallow
yeah.
waters.
Okay.
That is
Hello, can you hear me?
the nature of the license that determines the rate of the hydrocarbon tax.
Hello, can you hear me?
Yes.
Yes, I can hear you.
Yes. Can you please come again, Ibrahim?
Sorry, the lady didn't hear what you said last before you went briefly offline concerning
Yeah.
the tax rate when it comes to shallow water or deep water or offshore
So I was
or
saying
onshore.
that
Sorry.
the tax rate is basically determined by the nature of license, not necessarily by deep water, onshore, or things like that. So the nature of license determines whether it is marginal field, prospecting, or mining. Do you understand?
The mine is 30%.
You don't need to cram this thing. Just go to the last page of your question
No,
paper.
no,
You have it there.
I just want to write it down.
Yes. Okay.
And the process is 50%. How about the marginal?
Yeah.
The marginal is how many percent?
I'm sure marginal fields and prospecting is the same rate.
Okay, okay, 15%.
Daddy, stop that.
So is the margin the same as exploratory?
Hello. Hello.
The margin is the same
Hello, I
thing
can hear
as
you. I can hear you.
exploration license.
Which one is that? The mining, Abby?
The marginal.
Wait. Exploration. Exploration has to do with mining now. I have to confirm. I have to confirm and get back. All right, Ibrahim.
Okay. Good evening, sir. Yes.
Good evening.
I just wanted to add a little contribution concerning the question the other lady asked about the allowable expenses and the allowable expenses and the 65% of revenue, that application. I saw in a discussion somewhere where some experts said that if you allow these oil companies to apply all their expense, they will wipe out the whole revenue. There will be nothing for the
Yeah,
taxman.
that's correct.
That's why the
That's
tax
correct.
authority have to put in that caveat of 65% of revenue or
Mm.
cost CPR.
Yes, that's very correct. Because what they do is capital intensive. So at the end of the day, they have a lot of things to claim. That's very, very correct. Yeah. Emanuela, I've called you before. I didn't know if it's from my end. All right. Edina, Manasi. Okay. Folashade.
Hello.
Hello,
Yeah,
thank
Edina.
Hello.
you.
Sorry. Hello. Good evening, sir.
Good evening.
Please, I just need clarity concerning this adjusted profit and accessible profit. I want to really know at what point we have adjusted profit and accessible profit. Hello.
And accessible profit. I didn't get your question, but if you're asking about the difference between adjusted profit and accessible profit, then it's the same thing.
Why I'm asking that, a colleague asked that you said accessible profit is not after loss relief, but in this hydrocarbon computation we just did now, after the adjusted profit we have less loss relief, and after that we have accessible profits. But in the CIT you said it doesn't come after loss relief, so I don't understand. Hello.
Hello, Edina. I wasn't able to hear you, but you're my very good friend. You're my very good friend. I believe you can reach out to me.
Okay.
Yeah. But if you're asking about the difference between adjusted profit and accessible profit, they are the same thing.
Because there are situations where after the adjusted profit we will less loss relief, and then we arrive at accessible profits, and there are
To be honest, I know your viewpoint. That's why when Benjamin was asking, I was laughing because I knew he was coming from that point of view too. But
uh,
your point of
we
view
need
is
to
wrong.
understand, because all of these attracts mark, so we need to know
Yes,
where.
I've
I
told you
know that.
already. I've told you already that adjusted profit is same as accessible profit for company income tax. The notice for your share with you that if
Okay, what of the hydrocarbon this thing tax?
no, it's different. So for hydrocarbon tax, your adjusted profit is before loss relief. After loss relief, you get your accessible profit. But for company
Okay.
income tax, your adjusted profit doubles as accessible profit.
Okay. All right, thanks.
Clear, right?
Yes,
Yeah, Fola
sir.
Shadi.
Yes, okay, thank you very much. I know you've actually said this before, but I'm always kind of confused about it. It's about this tertiary education tax rate. So let me get you clearly. So if we have year of assessment for 2022-2023, we are going to use 2.5%.
Yes.
And if it's 2024, we are going to use 3%. If it's anything below 2022 downward, we'll use 2%. Am I correct?
Yes. Yeah, that's what I said. Yeah.
Okay, thank you. So I want to quickly take us to these what's it called? These other rates. I've forgotten. Um, sorry.
Patience, patience. Please be patient with us. Mute your mic. Okay. You can go ahead.
Okay, yes. Oh, so sorry. This turnover, this when you're calculating frank investment income, can it go with turnover and all the rest? So that percentage, I realized that okay, so if you are having so it's not pertaining to this particular question. I'm always having issue with
No,
that
go
one
ahead.
too.
Go ahead.
So
Go ahead.
for 2021 year of assessment, we are going to use
0.25.
0.25%.
Yeah.
Okay, all right. So, but after that, it's going to be
0.5.
sorry, 0.5%.
Yes, 0.5%.
0.5%. All right, thank you. Then before that time
Yeah.
is also 0.5%.
All right. I believe
All
I've
right,
answered you, Flashadi.
thank you, Mr. Michael. Thank you.
Yeah. Benjamin.
Yes, sir. Thank you once again, sir, for giving me audience again. Please, I just want to find out this petroleum investment allowance. I was going through the study pack and I came across it. So since we've been doing this hydrocarbon and CIT, I've not seen where it was applied. So I don't know if maybe it's just there, just to be there to occupy space. I don't know if there's a point at which we can use it when solving
I didn't
questions
get.
that pertain to. Are you with me, sir?
No, I'm not sure. You mean in the study pack?
Yes, yes.
I can study
There
pack.
is, yes. I don't know
So
if
what you have in
anybody
the
could
can
also
study pack is
reconfirm
petroleum
that.
profit tax.
Sir?
What you have in the study pack should be petroleum profit tax, I think.
No, it's a subtopic called petroleum investment allowance, and other they have different rates for maybe
So
like
it's not relevant. It's not relevant.
100
It has been
meters of
scrapped.
water depth.
It
Okay,
it
all those
has been
ones have been
scrapped.
scrapped.
It's
Okay.
under your petroleum profit tax. That's when you used to have. So, but it has been scrapped and replaced with production allowance. So don't bother yourself about
Oh,
that. In production, this PI is making life easier for everybody. So don't make it hard again. You get.
all right, sir. Okay. Thank you.
Yeah, Hassan. Okay, Favor.
Hello, good evening, sir.
Yeah, good evening, Chief.
No, this favor.
Yes, Favor. I know
Oh, good evening.
everybody's Chief. Oh, yeah, Chief.
Alright, so I wanted to ask if we had to study past because you know there are many outdated stuff and many scrap
So
stuff.
do
Like just
2020
advise us which
upward,
year 2020
2021
upward.
upward, 2021 upward,
Okay. Okay. Thank you,
2021
sir.
upward. Yeah, you're welcome.
All right,
If I
thank you,
answered
sir.
everybody, you're welcome. I want to be sure I answered everybody. So to meet again, I will see you again on Thursday, 8 p.m. So pending that time, if you have any question, feel free to drop it on the group. I will try as much as possible to close the group. I will try. I will try as much as possible to close the group. But then if we have a lot of relevant stuffs, then the group will be locked again.
Hello, Mr. Michael. Sorry, on the
Yeah.
timetable, it ought to be Monday. Are you swapping with SFM
So
again?
that's why